Hey, and welcome everyone. This is for all my real estate investor friends, as well as those realtors that work with real estate investors. I am Billy Brown, the founder of Investors Capital Group, your creative commercial loan broker, here to talk about a little strategy for your clients and yourself to go acquire more properties this year faster and easier. This is going to explode your client's wealth. And if you're a realtor, sell more homes using their lazy equity. What do I mean by lazy equity? Well, if you own rental properties, or your clients own rental properties, they have equity sitting in their properties like a lazy teenager, just sitting on the couch, eating popcorn, playing video games, just doing diddly squat. We're going to go employ that equity into growing more assets. And here's what this looks like. Well, first look at the problem, which is, right now there's an opportunity to go buy more properties, but your clients or yourself may have maxed out your Fannie Freddie loans. You're usually limited to between 9 and 10, including your personal residence. And if you're an investor, once you get past that, you're going to go to the bank lenders. Well, you may have reached out your aggregate limit with the bank, or as of right now, bank lenders are not lending any money to any non-owner occupied anything. It's a little bit tough getting lending. You may have actually had too many personal guaranteed loans, but here's the thing: you're equity rich, or your clients are equity rich, but they're relying on cash. We know legacy changing deals will present themselves. We want to make sure that we're able to take advantage of those opportunities with some dry powder, some liquidity, and the ability to borrow. And here's a very creative way to go do this. All right, let's go through a scenario. Let's just say in 2019, you have bought 4 properties for around $800,000. You placed loans on those for 640,000. And just for, just for ease of understanding, these will be just single family rentals. So we can get our head around it, but this strategy will work with other assets. 2024, the value goes up to 1.2 million, and you owe 575,000 thanks to the principal pay down from that loan. You have $625,000 of trapped equity just sitting there like a lazy teenager doing nothing. Now you found a deal of a lifetime. There's 4 duplexes for sale, 8 units total. Current rent is $1,000 each. The seller's asking $1 million. You know this thing's valued at $1.2 million, but here's the catch: it must close as a package. And if you're a realtor, your commission on this is $30,000. Your client, if you're a realtor, is cash light but has equity in properties. We're going to save this deal and your commission with this commercial loan product. It's called cross collateralization. We're going to acquire this asset using the existing equity as your down payment. So we have 4 properties over here. I'll have a little bit of equity in them, and we're going to add the 4 properties about to buy and go put them all under one nice umbrella. Here's a real life example before we get into the details. We had a client that owned 3 rental properties with low debt. She found a 4th property and bought it using the equity from those 3 properties as a down payment. It's one loan payment. It's a commercial mortgage, and the title is in her entity, not her personal name, and it's not on her personal credit. It's a 30-year amortizing loan. And in this case, she got $100,000 back at closing, which is tax-free. Here's the power. Again, back to tax-free proceeds. Obviously, check with your CPA if you're able to use that equity coming out of that existing portfolio. With these types of lenders, you do not need tax returns. Minimum credit score is 680, ideally 720 and above. They are 30-year amortizing loans, or you can be at interest only. 75% loan to value is max. They are normally indexed, as far as the rate is indexed off the 10-year treasury, plus 2.5% to 4%. So depending on when you watch this video, you can do the quick math just by looking up the 10-year treasury. Now, here's the interesting thing. It's a shorter seasoning period. So that means if you had a client that bought a property, improved it, tenanted it up, they don't need to wait the normal 6 to 12 months to be able to recapture that equity. Sometimes it can be quicker. In this case, there's one single loan payment that includes all the taxes and insurance. The properties will cash flow positively at a 1.25 debt service coverage ratio. If you need to know what that is, just message me and I'll send you some information on that. It is a commercial loan, so it does not report on your personal credit. And of course, you can buy through an LLC. And there is the ability, potentially, to get non-recourse lending. So here's a look at the numbers. If you're not number savvy, then just stick with the overall concept here, and we can do math on the side with your clients of a specific example. So let's just say you have, back to the example, $1.2 million, the value of the existing homes. The purchase price of these four duplexes are $1 million. So you got a total of $2.2 million in value. The maximum loan amount, and we're going to use a little bit lower value here just to be conservative, is 65% of those two numbers. The max loan amount for the purchase, if you just did that on itself, the $1 million asset is 650,000, and they're going to pay off the existing loan of those existing rentals, which is $575,000. Your loan amount is 1.275 million, and that client or yourself has zero cash due at closing, and that's a 58% loan to value. Pretty freaking cool. Let that sink in. You just bought four additional properties with no money. But here's the potential. If the conditions are right and it does debt service strong, there is actually potential to have cash back at closing, 205,000. Of course, this is a refinance. Debt is not taxable, and it is potentially, check with your CPA, tax free. And you get four additional properties at cash flow, $8,000 a month gross. So let that sink in for a little bit. What we just did there, pretty magical. You are now the hero. The sellers and the seller agents wins. Your buyer, your client, if you're a realtor, acquires these assets on the market and gains $8,000 per month with no money down, and you earn your $30,000 commission. If you have a scenario like this or have clients that are real estate investors, I'd love to contact us. Use the QR code left here to contact us at Investors Capital Group, or go to the website, theinvestorscapitalgroup.com, and we can schedule a call. You can also go to our website to see all our unique lending solutions for you and your clients. Hope this video was helpful to you and raised a lot of questions and curiosity. Happy to connect.